I should say the things have changed in some ways.
Who is the determinant of the public interest?
The more time people spend in digital worlds, the more of our lives we live there.
Intercoin, bringing power to the people. This is a big point. So if you're an investor and your objective is to see how can you actually grow your money in this environment, well, you can definitely buy treasuries. You can definitely buy bonds and corporate bonds and other things that now have higher yields. It becomes more attractive with higher interest rates. You could also consider shorting companies that you could see, like these advertising based companies, but that involves leverage. And the market could move against you, even though you might be right in the long term. But in the short term, different bull traps and bear traps where the market may temporarily go in another direction irrationally may wipe you out. But there may be something that's less risky than leverage trading and yet actually deliver returns that are far greater. And that is investing in early stage startups, companies that have a product, companies that have paying customers, and companies that may be leveraging Web3 smart contracts for the kind of guarantees that you as investors just couldn't previously get before. So let's take that one at a time. Let's talk about early stage, low cap companies and stocks. First of all, they're very different than simply a meme token in that there is a team out there that is basically going to be using either the token or growing the share price because whatever they're doing seems to have worked. You have to look for a company that has an actual product, not a company that's promising to give a product. That's more risky. That's called development risk. Have they developed it? So if the product works and you get a product demo and you could play around with it, it's not a video, it actually works, not like that truck, the electric truck that goes, is filmed backwards, but actually works, and you're able to play around, you like the product. The next step would be to ask, have any customers paid for this product? That's an interesting test because the team on the startup is typically not a sales team. They are typically product people and developers and people who could maybe raise money from investors, but not necessarily the type of marketer or PR person who has a huge network of customers and they know how to sell. So if they're able to sell their product, that's a good sign because then you could recruit a bunch of experienced sales companies that work on commission or whatever and are able to move product even better than the founders themselves. So if the founders, not being salespeople, are able to sell the product for, especially if they're able to sell the product for high ticket prices like $10,000 to $50,000, and they can do this repeatedly, then you know they can sell it for smaller price points and they can develop something for the long tail. But you know there's something there. Examples include Uber, which started out as a high-end driving company, and the slogan was everybody's personal driver, everyone's personal driver, the black car, the person in the suit, right? So then they became mass market later on because of Lyft and all that competition. But to know that people are willing to pay for that high-end experience and the experience exists, and there's a technology, an interface that's easy to use, those are the types of things you should look for. Now, be careful. Make sure that the customers are not just friends and family of this of the founding team. Wait a little while. Wait 1 or 2 months and make sure that they can close some more customers. You should be able to see how the sales is proceeding and ideally even get testimonials from the customers. It's okay for the customers not to be totally happy. It's okay for them to complain. The fact that the customer parted with their money and was willing to spend money, especially tens of thousands of dollars lifetime customer value, maybe not upfront, maybe over time, but that is a signal that there is something there. There's a need that the customer needs to fill. There's an itch that needs to be scratched. And the idea is that if the founders are able to find randomly a bunch of customers like this, the market must be there must be a lot of those out there. And so that's the opportunity. Now let's compare early stage startups to later stage companies. If you're coming into a later stage company, say a company that makes already $10 million in recurring annual revenue, ARR, if they are making that kind of money First of all, you're not getting a great deal because they can go to a bank. Those are the kinds of things that banks fund. If it's repeatable revenue and they've shown it can be done, a bank can just give them a loan. And if they're doing well, they'd rather pay the interest on that loan, even at these rates, than give up a percentage of their future revenues. Why would they do that? So that's one thing, is that you're already not getting as good a deal as if you came in early, but not so early that there's not a product and there's not any paying customer. However, a bigger thing is that for that company to grow, it needs to now deal with the wider market, because it's easy to find the next 100 customers in the entire world. And even if on average, statistically, people are losing money and there's not as many customers as there used to be, we're talking about millions of customers. And here you only have to find 100 or 200. That's huge. In other words, you actually have more risk with the large company in that the company has already reached the capacity that the world or its environment is trying to present to it. It's already found the demand and is now trying to eke out different efficiencies, maybe cut staff, maybe do things. Whereas the early stage startup is essentially, for its shares or tokens to grow, all it has to do is attract more customers and then get more press, which will then attract more investors like yourself to a product. And unlike the token project, there's an actual team and an actual product and a proven track record of customers who are willing to part with that money. Now, as an investor, you might want to get testimonials from these clients. And again, these could be videos, but you got to make sure that they're not friends and family only, that these include other customers. Perhaps if you really want to check, you should get involved and try to sell this thing yourself, or have some of your friends try to sell it to your associates. In other words, you don't have to bring other investors, but try to see, like the founders, other customers. In fact, you can offer the founders to be a salesperson. They'll give you the prospects and then you try to close them. If you see that it's easy to close for this product, or it's relatively easy compared to, say, selling, a juice blender nobody needs, that's a huge signal. So perhaps one of the best ways to do your due diligence is to actually be a salesperson for that very product yourself, and help refine the sales process. See why people are saying no. So if you see that you can actually plug some of these holes, and each of these holes, keep in mind, are multiplying and compounding. So for example, if you lose 10% of the people because of some hard to find link on the front page, and you fix that, suddenly that's 10% more people going to the second page. And once they reach the page where they pay, then essentially now you got the money. And then you reduce the amount of people asking for their money back and the satisfied customers. So you can think of the sales funnel, if you will, from beginning to end, from when people discover your product, ideally from other people. You look at this funnel, and every step you break it down and you see, what is the conversion? What steps does a customer have to go through? Each of these is, you're losing some people. There's some attrition. You end up not with 100% conversion, but 90% conversion. And so you look at where you can improve the conversion, where you get the most drop off. Let's say here you're losing 80% of your people. That's the place where you could deliver the most value as an investor turned sales consultant. And perhaps you should have sales consultants that are experienced, that are working with you. So you discover the founding team, and the sales consultant then comes in and helps. That's what you might want to spend your money on, because the founding team probably doesn't have the money to try to spend on this very important optimization. So by doing that, not only do you help the team and make them like you and give you a better deal, but you've also made a diamond, you found a diamond in the rough, and then you help to polish it off before anyone else took notice of it. And then, of course, once you do this, then you get more customers, you get more customer growth, you can then get stories. So that's the other type of partnership, and that is with PR, right? So once you get the sales going, and then you get some satisfied customers and you have them record testimonials, the very next thing is you actually try to get stories printed in these journals. And again, that's based on relationships. So these journalists already know, sources that they were willing to listen to and pick up the phone on, or read their email and check out the products. You can also go to things like Product Hunt and companies that essentially help to leverage their network to Kickstarter, Product Hunt, and so on, to boost things to the top. It's just the way these things work. Organically, you're not likely to get anything to the top of a big Reddit forum or anything like this. You do need to have essentially partnerships to game the system, because unfortunately that is how it all works. Social capital is something you need to amass. Okay, it's not an accident that a YouTube video gets 1 million views. It's because they've been building that over the years, and they have a lot of social capital and real capital and partnerships in place. So again, you need that. And if you're an investor who's investing in early stage startups, ideally, if you don't have this network of PR people, of boosting things on YouTube or Instagram or whatever it is for this product that needs to be, attracting customers to the top of the funnel. And if you don't have people who are optimizing this funnel in repeatable ways and are able to come in there and do copywriting, which can now be done and optimized also with AI and also A/B tested. If you're not doing these things and all you're doing is investing and giving your money to the founding team and hoping that they will do it, you're leaving a lot of money on the table. And remember, this is multiplication. This is exponential. Every time you improve a conversion rate from 20% to 40%, you have just doubled the bottom line. So there's plenty of opportunities for you to come and find inefficiencies in a startup and then come with your partners and pay those partners so the founding team doesn't have to pay them, and have those partners have as little that they need from the founding team as possible, so they can come in there, they can analyze everything, they can be self-directed and produce as many recommendations as they can, and then they can work with the founding team and essentially the developers to just integrate these suggestions. So you as an investor, your alpha, so to speak, in the startup space could be partnering with both the sales and the PR in order to remove inefficiencies in the sales funnel and then drive people to that sales funnel. And the most powerful thing is if you can make the product viral, which means that current customers or freemium model customers who aren't paying anything can then keep inviting more people and getting rewarded, for example, with tokens and credits that they can use within the system rather than paying. If you can get that, then you might not even need to spend any money on what is known as advertising or marketing. Notice I mentioned sales and PR rather than advertising and marketing, because like I said, advertising is a zero-sum game where one store A says, please come to us instead of store B, and store B says, please come to us instead of store A, and at the end, the platform on which you're advertising gets their money. I'm talking about where each project and each system is not just self-sustaining, but can grow exponentially. If you can get the viral factor above 1, you don't have to spend any money on marketing because you will get an exponential curve. How steep that exponential curve will be is just a matter of time, as long as the parameters remain the same. That means if the first 10 people behave in a certain way that the average person invites, say, 2 other people in the first month, that means after a month, that user base doubles. And that's the same for the forum, and that's the same also for the AMAs and the YouTube channel and everything else. In other words, what you would like to do ideally is to create a repeatable viral loop in that new people go through the same onboarding process and the same sales funnel, and they become a client, not necessarily a paying client yet, but someone who's motivated to bring on other people. So perhaps one of the ideal products is a product that either serves a community, so a community leader comes in there and then invites all of their remaining community in there. And then some people in that community happen to be involved with other communities. They may be leaders themselves, they may be other people who are staff, and then they'll go ahead and bring other communities. These are called super connectors. So in fact, you can even optimize to find startups who are serving the super connector. They're giving them the tools to connect with their community and to get something done. That super connector typically struggles with engaging their community, with finding relevant, interesting things and events for them to do. And also for that super connector, instead of having to do all the work, would like their members to have a hand in planning the events, connecting online, and just in general, connecting with each other over common interests without requiring the central planning of that person. Any startup that gives tools to these super connectors can be described as B to B to C. In other words, business to business to consumer. Now, you may say, yes, but these businesses, even the small businesses, are sometimes bureaucratic and they won't just take on a new SaaS, a software as a service model. And you'd be right. Sometimes there could be an even more powerful thing. You could have a startup which takes a lone teacher or yoga teacher or instructor or any sort of leader, and who doesn't really have an organization, a bureaucratic organization like a school or university or whatever enterprise sales you normally have to do. Just the individual who decides that they would like to have a tool to manage what they're doing. And then that individual, your tool helps them to become a business and incorporate a business around what they're doing. So in other words, you invest in the tools that help help turn consumers, which is teachers, whatever, into businesses. And then it's essentially, you are helping build the very business that will then give you recurring revenue. So compare that with regular investing. Regular investing is passive. It's a little bit lazy in that you could just hear a stock tip or something, go ahead and just pop on some sort of app and go buy that thing and you're done. But of course, if you're lazy, you're doing and you're getting everything else is doing and getting. It's all been priced in. That's why if you're competing in the public markets, you're essentially competing in a zero-sum game where the money is just being shuffled around. In other words, for someone to win and get more money, someone else, another investor, has to come in and have put that money in. So if they pull their money out later, let's say when everything went down, they've actually lost. So the people that actually lose are typically the people who buy the top or the people who sell the bottom. Or the people who are the biggest losers are typically the ones who leverage and they do things like futures trading. If you've ever done this, you've probably been liquidated a bunch of times, or maybe slightly safer is options. But then again, these options rarely pan out exactly the way you expect. And if you sell these options, you might be on the hook for a massive loss. So instead of leverage, instead of trying to eke out success in sideways markets where you're picking up pennies in front of a locomotive, consider that there is a reliable, repeatable model that not everyone uses. Consider that instead of competing with an entire world of investors, including hedge funds with high-speed trading and short time scales, that will outtrade you on short time scales and get in there and snipe things before you, or the long-term trading with wealth management that employs lots of quants and analysts that look at fundamentals of companies and analyze news and trends that are coming down the pike. Rather than having to compete with these companies that clearly are chosen by large wealth management family offices and investors for a reason. It's because they're going to take your money, and 5% of the participants on the markets take the other 95% money over time. It's like being in a casino where you could win short term, but eventually the house it always wins, right, in the end. How about your alpha? In other words, your advantage over the global market is that you don't compete with the global market. You happen to find, whether it's on the internet or locally or through friends, startups, early stage companies that have built something that people are willing to pay for. That's better than tokens because it's not a zero-sum game. It's not a bubble. It's something where the money's coming from customers. You could make a bubble on top of it by hyping the thing, that it will serve customers in the future and extrapolating these curves and these growth curves. You could do that, but you could also actually have an Excel spreadsheet and a model that will demonstrate those things, and you could actually have partners to optimize those things. So like I've said, if you come in and you help these founders focus on what they do best, which is building the product, and you come in with people who can optimize their sales funnel, do their copywriting, and in general, A/B test more and more successful conversion funnels for them. And if you can then do PR for them and get more and more stories printed, and if you can arrange all of this with them to form viral loops, then you're literally creating value where previously there wasn't any. And that is not necessarily a zero-sum game. At least it's not a type of zero-sum game on the short term that you would get in the stock market. Your advantage is that you're unearthing new diamonds. You're digging up more gold that no one ever saw before. Yes, the gold was there. Yes, the ideas were going to be done by someone, but they're going to be done by you. You had an active hand in growing the business side of what these founders have done. They have done the product, they have done the development, and you are going to take it to the next level. You could actually be helping society by creating efficiencies and products that serve people's needs, whether that's for entertainment, which is just to entertain people, or whether that's for actual utility and actually helping people connect with their kids or their parents, or maybe helping them eat better or be healthier or whatever. That technology and science is what drives society forward. Like to be the first to hear about Intercoin's roadmap and news? Definitely join and subscribe to the channel. Don't forget to click that little notification button so you can get updates when the next video drops and the next time we interview a legend like Noam Chomsky or Patrick Friedman. And if you would like to participate in the conversation, go to community.intercoin.app. We'd love to hear from you and about your community. This is what the project is all about. Intercoin, bringing power to the people.